Hey guys, and welcome to the Working Money Channel. So a lot going on today. I wanted to start this off with Stéphane Hubert. XRP is one heck of an SHIT coin. The biggest crypto lawsuit in history on its head and still managing to outperform Bitcoin by 6x year to date. Despite the SEC, despite JED, despite FUD, despite corruption, we know why. You don't want a level playing field, but our time will come. And so, we're looking at the XRP chart right now, and yeah, okay. I mean, we did see quite a significant dump yesterday. If I throw XRP right here on the hourly, we can see we did reach that high of about $1.41 on September 6th, and it did correct about 30%, almost 30% within a couple of days, and now we're trading up near $1.08. So a significant dump for XRP, but you know what, guys? It wasn't just XRP. The entire crypto market did decline. This is Bitcoin on the hourly. Bitcoin trading right now at 46,500, and we can see if I take this off auto, get rid of that. We can see, wow, look at that dip. It came right down just below $43,000, but we are making that double bounce. Okay, now hopefully coming up out of that, and so that's Bitcoin. If I bring XRP back up here, we can see XRP, that same kind of thing. Let me get rid of that. Same kind of thing here. Okay, double bounce. Hopefully going to rebound, come up out of that. Hopefully we won't see any lower lows, and it might be something like this. Okay, coming out of that, it certainly isn't going to V-bottom right out of that. I have a feeling that, this took some significant money out of the market. Right now, the market cap of the entire crypto market, just over $2 trillion. And Bitcoin dominance, though, still at 42.5. So that's the other thing as well, right? Bear market fears. Worry, panic. Oops, BTC.D. If I bring up the dominance chart here for Bitcoin, let me just throw that. I'll throw it on the daily here for dominance. What we're aiming for is we want Bitcoin dominance to continue to move down, and sure enough, it is finding support over here. So that is another thing we have to pay attention to, right? Bitcoin dominance finding support where it had previously found some support. So down in and around here, Bitcoin dominance coming down and then rebounding back up. So finding support there. Ultimately, though, what we do want, of course, Bitcoin dominance to tumble, and that is when we are going to see the alt market rise. So this is all par for the course, guys. The other thing I wanted to show you guys was Algorand. Now, Algorand just kind of came right back up out of this thing, dipped. Okay, so let me throw that on the hourly just to show you guys real quick here. Algorand did dip like those other cryptocurrencies, but for some reason, just kind of rebounded right back out of here, V-bottom recovery, and made a new high. So it is really remarkable and quite astonishing sometimes. No rhyme or reason why a lot of these coins in the double digits, in the negative, but then, bring it down here to Algorand is up 17.47%. Well, now up 24.04% in the last 24 hours. So up to $1.68. Ranked 29 now, and as you guys can see, the rest of the cryptocurrency market, namely the altcoins, are down double digits. Bitcoin down 8.55, Ethereum down 8.91. So Algorand, our little diamond in the rough after this crash. I mean, I'm happy I'm holding Algorand. There's a lot going on today, as I mentioned, and I wanted to start off with this from Wrath of Kahneman. In this World Economic Forum document, Joe Lubin says that after starting Ethereum as an open source platform, Ethereum earned $18 million in revenue by selling tokens. So this is directly in this document here. This is just a screen grab from the document from the World Economic Forum. Then he says they were not decentralized until they could build tools. So why is it that the SEC decided XRP is any different? So just more evidence to suggest that the SEC doesn't have a prayer to win this lawsuit. I mean, that's my unofficial legal opinion. I am not a lawyer, obviously, but the more evidence obviously is piling up, the better it is going to be for the XRP Ripple lawsuit against the SEC. Wrath of Kahneman down here does link that weforum.org document, so the link is down here in the description if you guys are interested. He says the Ethereum founding narrative seems awfully similar to the XRPL. Here's the WEF source. Again, the document is here. The point here, aside from a deep concern about how things are being done in the SEC, is that without specific guidance to the country, Ripple's assumption it was not selling a security seems at least reasonable. So, this does speak volumes, of course, to Ripple's what they thought they were doing was totally fine at that point in time. And, again, more evidence to suggest that. Wanted to thank the Wrath of Kahneman for pointing that out. Experience Matters here at Mr. KDCO here on Twitter posted this article. Now, this was from a few months ago. A top SEC official was receiving a $1.6 million law firm pension from Simpson Thacher, and that was 7 times his government salary. It shows why cracking down on golden parachutes is so hard. So this was from the beginning of the year, January of 2021. However, it just kind of demonstrates what was going on behind the scenes. At the SEC, when Bill Hinman was there, he was still receiving his private pension. So Bill Hinman, a Silicon Valley deals lawyer and top SEC official, was receiving a $1.6 million pension on top of his roughly $217,000 a year salary. There's no sign the payments were illegal, but a former SEC ethics lawyer called them a little unsettling. Biden has banned golden parachutes for nominees, but the ban may leave some wiggle room. So, again, an older article here. I will link it in the description for you guys if you care to read some of the details. I don't want to go over this so much. Another one here from Michael at Val5 Links. Grayscale CEO reacts as SEC signals approval of the Bitcoin ETF. So this also just kind of speaks volumes as to where I think some of these CEOs of these big companies that are in the financial sector are kind of scratching their head with regards to the SEC. And yes, we are going to get to the big story in a second. But this has to do with Michael Sonnenschein, okay, CEO of Grayscale Investments. According to Sonnenschein, the SEC would be making a mistake if it approves Bitcoin-based ETF in the US before granting approval for one tied to the crypto itself. Sonnenschein has reacted to a recent comment by the SEC on Bitcoin ETF, or on the Bitcoin ETF. The SEC chair, Gary Gensler, hinted that the commission may approve the first Bitcoin ETF in the US. Gensler's statement caused a stir, triggering a reaction from the CEO of Grayscale Investments. According to Sonnenschein, the SEC would be making a mistake if it does approve the Bitcoin-based ETF in the US before granting approval for one tied to the crypto itself. So he says, this is an interview with Squawkbox. He says it would be short-sighted of the SEC to allow a futures-based product into the market before a spot product. They really should be allowing both products into the market at the same time and let investors choose what they want. So, other opinions here coming from professionals in this space wondering, SEC, why would you decide to approve this and not the spot product itself? It kind of doesn't make sense. It kind of goes against, what the trend has been thus far. For some time now, Grayscale has been looking to convert its Bitcoin trust into an ETF. An ETF will allow investors to put their money in an investment fund that would keep track of Bitcoin's price. Back in August, the SEC chair hinted that the commission would review applications for ETF launch from investment firms. Specifically, the regulator was seeking to consider applications to launch ETFs tied to Bitcoin futures on the Chicago Mercantile Exchange. Without Grayscale Bitcoin Trust's successful transition into an ETF, investors may need to divert their funds into a future-based ETF. So, kind of not really how it should work, at least according to Michael Sonnenschein. And so there was also this. Now, Outrager here on Twitter pointing out the obvious, nothing new to see here, retweeting out Walter Bloomberg's tweet. Coinbase says aware transactions are currently delayed or canceled at elevated rates and our apps may be experiencing errors. Now, this was coming down the pipe when we were seeing this, but when we were seeing this crypto crash. Coinbase obviously experiencing the typical technical difficulties that we are all aware of that have happened in the past. I had somebody on my personal Facebook make a post on his wall, and he wrote, hey, crypto friends out there, any other exchanges that maybe I should be using? Coinbase is going down. I'm having a problem trying to trade my funds. And I just kind of laughed and thought to myself, noob. I did respond to him, however, with a few viable options. But again, this is the thing, right? So many people have jumped into the cryptocurrency space so recently that they don't know that this is what happens when you are tied to Coinbase. So it's always good to have, other exchanges available, other possibilities to on-ramp and off-ramp your fiat or your cryptocurrency. It's good to have a few different options available to you because this does tend to happen. I've been saying this for years now. It seems like years at least. And so, with regards to Coinbase, David Schwartz here tweeting this out. Sorry, can't relate, obviously being very facetious. Retweeting out Brian Armstrong's tweet here. So, The SEC has finally come down and sued Coinbase, and not only Coinbase, guys. Let me read you this. Some really sketchy behavior coming out of the SEC recently. David Schwartz, can't relate. Millions of crypto holders have been earning yield on their assets over the last few years. It makes sense. If you want to lend out your funds, you can earn a return. Everyone seems happy. A bunch of great companies in crypto have been offering versions of this for years. Coinbase came out recently and said we would be launching our own version. We were planning to go live in a few weeks, so we reached out to the SEC to give them a friendly heads up and briefing. They responded by telling us, now get this, it is like a mirror image of what happened to Ripple. They responded by telling us this lend feature is a security. Okay, seems strange. How can lending be a security? So we asked the SEC to help us understand and share their view. We always make an effort to work proactively with regulators and keep an open mind. They refuse to tell us why they think it's a security. Sound familiar? And instead subpoena a bunch of records from us. We comply. They demand testimony from our employees. We comply. And then tell us they will be suing us if we proceed to launch, with zero explanation as to why. Look, we're committed to following the law, says Brian Armstrong. Sometimes the law is unclear. So if the SEC wants to publish guidance, we are also happy to follow that. It's nice if you actually enforce it evenly across the industry, equally, by the way. This is exactly what Ripple has been saying for the last year. But in this case, they are refusing to offer any opinion in writing to the industry on what should be allowed and why, and instead are engaging in intimidation tactics behind closed doors. Whatever their theory is, it feels like a reach/land grab versus other regulators. Meanwhile, plenty of other crypto companies continue to offer a lend feature, but Coinbase is somehow not allowed to. Gensler, in his confirmation hearing, it's important for the SEC to provide guidance and clarity. Gensler said, sometimes that's a clarity that will be a thumbs up, but even if it's a thumbs down, it's important to provide that. He said that on March 2nd, 2021. If you don't want this type of activity, then simply publish your position in writing and enforce it evenly across the industry. Ostensibly, SEC's goals is to protect investors and create fair markets. So who are they protecting here, and where is the harm? People seem pretty happy to be earning yield on these various products across lots of crypto companies. Shutting these down would arguably be harming consumers more than protecting them, and by preventing Coinbase from launching the same thing that other companies already have live. They're creating an unfair market. In May of this year, I traveled to DC to meet with every regulator and branch of government I could. The SEC was the only regulator that refused to meet with me, saying we're not meeting with any crypto companies. This was right after we became the first crypto company to go public in the US. So Brian Armstrong does tweet out his tweet with regards to that meeting in DC. It's almost done, guys. Going to continue here. Gensler had been confirmed just a month prior, so I brushed it off as the SEC still getting its feet under it. Now I'm not so sure. We've always tried to be good actors in this space, leaning into sensible regulation, even when it is difficult or expensive. We try to think about what products we would want for ourselves and what risks we would want for families to be aware of before launching products. We will keep following this approach, yet here we're being threatened with legal action before a single bit of actual guidance has been given to the industry on these products. If we end up in court, we may finally get the regulatory clarity the SEC refuses to provide. Well, luckily, Brian Armstrong, you do already have Ripple and XRP as those trailblazers. And now this actually kind of makes me happy that Ripple is in court first, because you know what this means? If this is happening, and we are going to see now a lot of companies end up in this boat. I've said this on this channel before, but I think I'll reiterate because I only think I've said it once. Somebody pointed this out months ago. Ripple is the first in court, so Ripple is going to be the first to receive that regulatory clarity. The price of XRP will reflect that in theory, and so, you know, we will see price accumulation for XRP before, the rest of these cryptocurrencies, and the rest of the cryptocurrencies will follow suit. Of course, Ripple and XRP, this lawsuit here is also going to have an effect on the rest of the crypto market, but I think it is good for XRP specifically to have that clarity. That'll definitely mean moon time for XRP hodlers rather than scratching your head wondering what could happen next. In this case, it's Coinbase. It could be any company that follows. So he says if we end up in court, we may finally get the regulatory the SEC refuses to provide, but regulation by litigation should be the last resort for the SEC, not the first. Our door remains open. Hopefully the SEC steps up to create create the clarity this industry deserves without harming consumers and companies in the process. America could really use us all working together to figure this out right now. So where was the support, Brian Armstrong, when Ripple was sent to court? Where was the support? Turning your head, looking the other way, assuming it would never happen to you. And now, well, ain't karma a bitch? Arturo Portilla here. Can't believe you're acting like you didn't know this would happen. You're a bunch of clowns. We ring the gosh darn bell for you a million times. You thought delisting XRP was the right thing to do when you should have fought instead. You legitimized the SEC's power grab. He continues by saying perhaps this will finally bring the stupid tribalism to an end. I certainly hope it does. And Darren Moore here, just responding with his opinion, they don't want you to earn interest on crypto. They want you in depreciating dollars. Again, this is not about protecting investors. This is about having power. Now, the SEC did not only sue Coinbase. Apparently, Uniswap is also now faced with a lawsuit. This from BondCrypt XRP. The SEC probe on Uniswap. Regulators want to find out more about DEX structure and marketing. So just briefly, guys, the SEC has signaled again that DeFi or decentralized finance platforms aren't immune from legal scrutiny. This week, it launched a civil investigation into Uniswap Labs, creators of the popular Uniswap DEX. Uniswap is one of the oldest DEXs or decentralized exchanges and is currently the largest, running on Ethereum. It launched in November of 2018 and has seen over $10 billion in weekly trading volume pass through its networks. The latest version of the DEX has an estimated volume of about $39 billion in August, while its previous version that's still active held about $14 billion worth of trades, this according to CoinGecko data. So Uniswap, another company that is now being targeted by the SEC. Down here, this article continues. One of the rationales behind the creation of DeFis and DEXs is security. Users retain custody of their own assets in local wallets. Another is regulation, of course, down here. DeFi app developers create only software and never take custody of users' assets. In theory, this immunizes them from certain legal obligations since they don't issue or decide to list assets and don't have direct control over how their software is coded. And then to sum up, governments, it's unlikely that governments will allow DeFi platforms to grow large enough to have large volumes of funds to pass through their networks unmonitored. The move to investigate Uniswap Labs may be a civil investigation or a friendly-faced fact-finding exercise, nice alliteration, but it's a signal the SEC and likely other regulators around the world are looking for new ways to exert authority over the individuals responsible for their existence. As Dr. Craig Wright has said repeatedly, code is not law. Governments will not tolerate attempts to skirt their laws for long, and behind all code projects, there are humans writing the code. And so, some suggesting that this was just the writing on the wall, that this was going to happen eventually. But it is interesting to see this lawsuit, right? This probe into Uniswap now coming down the pipe. And Coinbase, Brian Armstrong, perhaps thought that Coinbase was free and clear since they did just recently release an IPO on the stock market. That would have been approved by the SEC. But no one is immune, Brian Armstrong. No one is immune. So the SEC fought. This coming from Anders L on Twitter. The SEC fought Ripple the hardest because correspondent banking is a huge revenue stream for a few mega banks. Now with Uniswap and Coinbase, they're also a threat to revenue streams of banks. They don't want people to have the option to lend from Coinbase instead of a bank. Again, guys, I have to reiterate, this is not about protecting investors. This is about control. And so it really does make you wonder, in a lot of ways, when we got into cryptocurrency back in, some of us in 2017, some of us a little later, we never saw it going down this way. We always thought of ourselves as, well, I can always put my crypto on an exchange and cash out if, the crap hits the fan. I'll be able to move my money around. I'll be able to use my cryptocurrency and pay for things. And I don't think we ever really saw the landscape change in this way, where the SEC would really just kind of attack all those bodies, all those important cryptocurrency companies that are really kind of reframing what finance is going to look like. And so, to Anders L's point here, correspondent banking is a huge revenue stream. Of course, we target Ripple for that. Collecting interest off lending cryptocurrency, we're going to nail Coinbase for that. They do not want to relinquish control. So again, guys, another wrench in the plan. This is all part of a bigger picture, a coordinated event that would suggest a new financial structure set in line with the Great Reset Initiative. Yes, I'm going to say it, the Great Reset Initiative. I mean, at the end of the day, it's all about having more control over what people are spending, how people are making money, where people are spending it, being able to track people with CBDCs eventually. And so why else do you think the SEC is coming down hard? Ripple is just the first fish, but now Coinbase is on the hot seat. Uniswap, who do you think will be next? Brad Garlinghouse here. I think this is a rock star tweet, and the best tweet ever goes to Brad Garlinghouse. Welcome to the party, pal. Tweeting out to Brian Armstrong. Great Die Hard reference. I love that movie. Anyway, that's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.